There's so much information coming at us today, and I'd argue, that's only going to the pace is only going to continue to pick up, and some of it's noise, right? So the ability for some of this data science and tools to, kind of help us distill this information, analyze the information quicker, allows us to better read markets, provide those insights, and do our jobs for our clients.
Hello, I'm Kate Galloway, Director of Brand and Marketing Communications for Ever.Ag. Welcome to Ag Smarter Sessions, where we sit down with thought leaders, forward movers, and problem solvers to explore real-world challenges, intelligent solutions, and what's next for the future of food and agriculture. Today, we're sitting down with Dr. Lee Schulz, Chief Economist for Livestock here at Ever.Ag. We're going to chat about what's happening with pork specifically and the current impacts on the domestic and global economy. So let's dive in. We've got a lot of questions, so let's get into it. Okay, so first question, anyone who's been at the meat counter knows that, things are expensive. Going out to dinner is expensive. We've got record beef prices and egg prices. It's expensive to feed a family. So how would you characterize the current state of consumer demand for pork, both domestically and internationally?
We can look at per capita consumption in the first quarter of 2025 was actually lower than the first quarter of 2024 by about 3%. So the quantity consumed was less. Now the price paid was higher. It was 2.7% in the dollars we're exchanging, the nominal dollars. When we adjust for inflation, it was only a slight increase in price. And so that effectively says pork really increased at the rate of inflation.
All right, let's get to the topic that changes every week, which is the tariffs and export market shifts. So, what we're seeing right now, at least, or what we anticipate maybe, or, what's been happening in the last, I don't know, a couple weeks or so, how has that impacted the U.S. pork industry's bottom line?
I think first and foremost, it has raised volatility, right? Obviously, in our markets, as markets are reacting to headlines, that has caused our expectation, or at least even kind of our markets' ability to kind of distill what that equilibrium price is. It's become more difficult. Anytime you add volatility, you're adding some cost to that. Now that volatility is not necessarily bad. It can be bad, but it also can be to the upside as well. So I think, but overall, it's kind of added kind of the cost, and it's provided that uncertainty. As an analyst standpoint, I think it's even more key now to understand the fundamental relationships, because those are at the end of the day kind of what are impacting our markets, and you have to be able to distill that from maybe some of the phrase we'll use, kind of headline news now, right? Because markets are work tremendously well, right? I mean, I'm a very efficient market hypothesis guy, right? But sometimes markets overreact or underreact to information, and it takes time for that information to, be kind of priced into the market. And so, at the end of the day, I mean, I think it's important to, understand the impacts of, in this case, tariffs and export markets, but also you have to be really founded in the fundamentals as well, because that's similarly driving our markets, and you need to kind of have that as a strong base.
So, a big question here, and I know it's one that's sort of shifting and changing and a little bit new for us, is some of the labor shortages. And I guess from an economic standpoint, like how does that labor availability and cost factor into the longer term viability of pork operations?
When it comes to labor, I think there is some shortages. When we think wage rates have increased, but we haven't really created more workers, right? So the case can be made that there is some labor shortages. Now, that's not a solution, but that just kind of shows you that net wages aren't the only factor that can kind of create more workers and help us solve this issue. I would say I think we're in a bit better labor situation today maybe than we have been, even in kind of the recent past. Now, some of that has come about because we've seen a bit of a shrinking of the available capacity, right? So we had some excess capacity in the industry. We kind of squeezed it out of the industry. So now, we have a little bit better balance relative to the supplies of hogs that are out there. But that's really a moving target too. There's also programs to, allow for faster line speeds, right? So that allows to operate that capacity a bit quicker. So you don't need necessarily the same amount of labors or more shifts to process that many hogs. If you look at it both farm and packing, there's a lot of times it's difficult to change that labor in the short term, right? Or the need for that labor in the short term. On the farm, it ends up being a lot of unpaid labor and management, right? The owner has to do the work, right? Now, in packing plants, you can run Saturdays or you can run additional shifts to make up for some of the maybe decline or lack of labor. Now, in the longer term, there's opportunities for labor saving, technologies, right? That have less of a reliance on labor.
What role do you see risk management tools like LRP or hedging playing in a producer's long term business strategy, especially given today's volatility?
So I think importantly, price risk management is one area that producers have a choice to reduce risk. First and foremost, I think producers need to consider all the tools available to accomplish their price risk objectives. Importantly, price risk management isn't about getting the highest price, right? It's about managing some of the risk and obviously the downside risk when we think about hogs and for example, or the upside of thinking about feed inputs for example. So it's being able to be flexible, right? To adjust to kind of market conditions. For me, it's important not for producers not to wait for the market to come to them either. There's opportunities to ensure prices or margins, set several targets to really allow for changing market trends. And if we look at back to 2023, producers have been on defense for much of the last 2+ years. I think as we look at current markets, there's some opportunity to go on offense, to look at some of the highest profits we've seen, at least kind of coming in the next couple of months, that we've seen really since 2001, 2022. And so looking at opportunities, to still maybe allow for some upside in the market, but provide some certainty around some of the prices that we're seeing.
If you were talking to a young producer entering the pork industry today, what economic realities and opportunities would you want them to understand right at the outset?
And I'll go back to kind of some economic fundamentals here. Market participants can expect an average return for their resources, and those resources being capital, labor, and management, where the average return reflects the risk in a particular industry or enterprise, right? So as you think about where I can put my time, attention, and resources, that's what individuals are making is they're thinking about entering or exiting or expanding or contracting in operations. And I said it before, long run economic profits are pretty close to zero, right? So it's important to keep in mind in a competitive industry. Some other things I think are really important to keep in mind are that operations of all sizes and types have a role in the industry, right? So it's really about finding your role in the industry, responding to port customer and consumer interests, providing a consistent supply of high quality pork at competitive prices.
Given your role at Ever.Ag, you get to see, a lot of these things in data science and what it can do for agriculture. So, where are you seeing some of the biggest opportunity or where do you see this evolving into?
And that's probably been one of the greater appreciations that I've had since joining Ever.Ag. I've always been a slow adopter in technology and kind of naive to the ability, right? A lot of these technologies advancements, be it machine learning, artificial intelligence, I mean, they're coming at us regardless if we're ready for it, if we like it or not, right? So I think it's important to really embrace that. And for me, I think I see, a lot of times the short term pressures often temper those investments in, data science or technology because we're dealing with the problem of the day, right? And it's hard to think about those innovations that'll pay off in 5, 10, 15 years that really could be, cost savings and really improve my bottom line. Uh, but it has a longer term payoff. And so I think, embracing that innovation, even though you're dealing with the challenges today, is very critical.
Well, I really appreciate you talking with us. One question we always leave with is what does ag smarter mean to you?
So it's going to sound a little bit cliche, I think, but there's an old saying that you have two ears and one mouth for a reason. I would encourage kind of more listening and more, seeing what others are doing versus kind of staying in your own lane. Because I know I'm guilty of that, than anyone is kind of just kind of again focusing on what I know. But I think there's so much more we can grow of looking at others and where others are at the forefront.